One of the very important tools in stock trading is called the candlestick chart. Now, if you're a long-term investor, it really doesn't matter which chart you look at. You analyze the stock from a quality perspective as to, whether it's giving regular profits or not, how the management is doing, what are the sales figures, and so on and so forth. And you probably look at PE and earnings per share and so on and so forth, and decide a good price. And even if it's not really an excellent price, you're not going to be selling it in the next couple of weeks. You're going to be waiting for the next 20 years. And if it's a good stock, in all good probability, you will have excellent returns out of the stock. And in one of my previous posts, I've talked about a list of stocks that you can buy at any particular price and wait for 20 years. And, in all probability, you'll make really good returns. But when you are doing stock trading, and what that means is when you're trying to make trading one of your mainstream incomes, and when you're looking at returns coming out of your investments in the next couple of weeks to months, it becomes very important for you to be able to squeeze every last potential out of your transactions. And the candlestick chart provides a very unique perspective at the stocks and at the shares and the prices and your transactions. So it's very important that you understand what a candlestick chart is. Hello, folks. My name is Neil, and today we are going to be talking about candlestick charts. So what you see on this screen is a daily candlestick chart of Nifty. Now, what does a daily candlestick chart mean? A daily candlestick chart means that every candle that you see on the screen represents a day. This represents today. This candlestick represents yesterday. This one represents day before, and so on. Now, if this would have been a weekly chart, then each candlestick would have represented a week. If this would have been an hourly chart, then each candlestick would have represented an hour. Now, what is a candlestick really? So candlestick has two parts. One is the big thick body that you see, and the other is the small wick that's coming out of that particular candlestick. Now, what does it mean? So the body is made up of the opening price and the closing price. The opening price is one end of the candlestick, and the closing price is the other end of the candlestick. Now, if the price went high above the opening price or the closing price, that becomes the wick. Which leads us to the next question is, why are the colors green or red of a particular candlestick? If the opening price was low and the closing price was high, then the candlestick is colored green. If the opening price was high and the closing price was low, then the candlestick is red. What that means is if the price of a particular stock or an index opened low, went up during the day, and closed high, then the candlestick would be red. If the price of a particular stock or index opened high, went down, and closed low, then it would be a red candlestick. Now, obviously, we've understood two candlesticks, green and red. There is also a third hidden candlestick that few people know about, and that's called a basing candle. If the body is large and the wick is small, it's a red candle. If the body is large and the wick is small, it's a green candle. But sometimes within the red and green candles, the body is the body is short and the wick is long. You will see many such candles. This is a basing candle, this is a basing candle, this is a basing candle, where the wick is long and the body is small. What that means is the opening price and the closing prices were close to each other, and the high and the low of that particular day is far away from the opening price and the closing price. That is called a basing candle. Now, what is the significance of the basing candle and how we can use it to take decisions regarding our transactions is something that we'll look at in another session. But for now, understand that there are three types of candles. There are red candles and there are green candles, and there are the basing candles, which could be either red or green, but they're hidden. Finally, let's take a look at the application of the candle knowledge that we just gathered. If you see a big green candle like this one, it means that the price on that particular day jumped up. If you see a big red candle like this one, or this one, or this one, it basically means that the price jumped down on that particular day. It could be called a crash. Otherwise, there are small green candles and red candles which are, sideways moves or small moves on that particular day and are not very significant. We also understood about basing candles. Now, if you look at this, this is a basing candle. Now, as we said before, a basing candle represents a significant move on that particular day. It also represents a level. If you see a basing candle, it means that the price jumped up and down and closed, closer to the opening and the closing prices. For example, here. Now, if we draw a line here, you will see that the next time the price comes there, it will jump up again. So it forms a sort of a level. If you go back a little bit and look at other instances, you will find such instances there. Right? This is a basing candle you see here. And let me sort of zoom in there a little bit. This is a basing candle. If I draw a horizontal line here, you will see that the price goes up, comes down to that particular level or in the vicinity, and then jumps back up. You will see multiple instances of such reactions from a particular level in any chart, whether it's an index. This is a daily index of Nifty, but if you look at any index or any chart or any stock, and if you try to understand what a basing candle is, you'll see that it represents a particular level, and the next time the price comes to that particular level, it jumps up. Now let's try and apply this knowledge of candlestick and candlestick charts to one of the stocks today. If you notice that the market, or Nifty in particular, has been going up for the last couple of days. It may have corrected a little bit today, but overall the trend is upwards. Now let's see if we can buy something today, or is there something that we can buy today where we can apply the entire knowledge of basing candles and stocks going up and down and jumping up. So there is a particular stock that I had in mind, which I had looked at today, which is Ramco Cement. Now, if you look at this particular candle here, this is a basing candle. If I apply that same logic on a different chart, let's go to a 60-minute chart, right? And go back a little bit. There is a basing candle here from where the stock has shot up, right? Now it has went all the way there and it's come down to the same level that it had shot up from. Let's fine tune it a little bit. And I'm using the 60-minute chart because I want to get my returns within a few days to a few weeks, right? I'm expecting the price to shoot up from here tomorrow, primarily because I see that the entire market is overall moving upwards. So the market forces will force this stock also to move upwards a little bit. However, I can have a stop loss, like I've told you before, just below this particular basing candle's lower wick, right? Or I could, fine tune it further and use this basing candle, because this is also a basing candle, and have the buying price at 937 rupees and 25 paise with a stop loss on 927.7. If the stock price does not shoot up from here, I wait till it crosses 927.7 and I apply stop loss. But in all probability, it will come down till here and then shoot up. If it doesn't come down till here and start reacting from here itself, because there are times where it also reacts from the vicinity, keep an eye out and purchase at 941 levels, which is also not a bad price. Now, if you want to be 100% sure, we can apply a few other indicators. Maybe we can apply the relative strength index indicator, which we had talked about in one of the previous videos, and I'll share the link with you in there. And you can see that the relative strength index of today is at about 32.36 over here, which means it's low. Anything below 40 or 35 is actually low, so it's a good price to buy. It's just an indicator. We can also apply another indicator called the Bollinger Bands. And what we had learned in one of the previous videos is once it touches the Bollinger Band, there is a high probability that it will spring back to the mean. Uh, and we can see that the Bollinger Band has also been touched here. Um, it's approaching a level which from where it had shot up earlier, and the relative strength index is low, which means it's a good time to buy Ramco cement. I hope you have enjoyed the content today. Um, if you have any feedback for me, I'm always looking for feedback to learn new things. If you would like me to cover some topics, do let me know and I'll do my best. Other than that, I wish all of us all a lot of good luck, and I hope that we make a ton of money out of the stock market. Have fun.